What's up, strangers? Welcome to the Wealth Game Nation. My name is Vedo and I'm here to help you better understand the wealth game and become part of the Wealth Game Nation. PayPal just reported its second quarter 2023 earnings and the stock is down 7% in after hours. In this video, I will go over their earnings, talk about PayPal's valuation and explain why the stock is down 7% in after hours. It will be full of information, so let's get right into it. Alright, before we dive into the specifics, I gotta make one thing crystal clear. I may have an opinion on the stock, but this is still only an opinion and not a financial advice. I don't want no SEC knocking on my door. So if you end up investing in something wild and wacky based on my blabbering, don't blame me when your pockets feel a little lighter. This is all for educational and entertainment purposes only. You know, like a clown juggling rubber chickens. So buckle up, enjoy the ride, and remember, when it comes to investing, do your own research. As you can see, this is my brokerage account. I have currently 93,000 euros invested in 14 different companies and 4 ETFs. If you would like to have a full breakdown of my stock portfolio, go check out my portfolio reveal video in the description of this video. As you can see, I have a position in PayPal. I have around 2,400 euros invested in PayPal and my position is currently down by 21%. This is not a major position for me and it's only around 2.5% of my total portfolio. In this article from MarketWatch, it says that PayPal stocks falls as earnings beat, but a margin metric misses. Further in this article, it says that PayPal has earned $1.16 per share and the consensus was $1.15 per share. So essentially, they beat their earnings by 1 penny, which in the grand scheme of things absolutely does not make the cow fat. Also in this article, it says that revenue increased to 7.29 billion from 6.81 billion, whereas the analysts were modeling 7.27, so they beat their revenue by 0.02 billion. Also, the revenue increase is 7%. I have a calculator. Further down in this article, it says that PayPal reported an adjusted operating margin of 21.4% for the second quarter, below the 22% outlook that the company had given previously. So there we have it. The operating margins are decreasing and the revenue is growing, which is not a great combination. Also at the bottom of this report, it says that PayPal expects second half revenue to at least match its first quarter revenue total. I think this is a typo. It should not be first quarter, it should be the first half. So they're expecting their second half of the year to match the first half of the year. Lastly, for the third quarter, PayPal expects $1.22 to $1.24 in adjusted earnings per share, along with revenue of about 7.4 billion. The FactSet consensus was for 1.21 in adjusted earnings per share and 7.3 billion in revenue. So for the third quarter 2023, PayPal is projecting to beat their earnings per share as well as revenue. In addition to the operating margins from PayPal, there is also a second factor which may have impacted the stock market today, and that is that Fitch, the credit agency, has downgraded the US credit rating from AAA to AA+. Lovely lady in the picture. Further down in the article, it says that Fitch, one of the 3 major independent agencies that assess creditworthiness, cut the ratings from the top level of AAA to a notch lower to AA+. In case you're wondering why is this relevant for investing, it says that investors use credit ratings as a benchmark for judging how risky it is to lend money to the government. Keep this in mind, I will tie this in a little bit later. As a result of this rating downgrade, we can see that today everything is red. The Nasdaq went down by 2.21%, Nasdaq Next Generation went 1.7%, S&P 500 went by 1.38%, some German and European stuff also went down, and the Dow Jones went down by 0.98%. So investors are selling on the news of the downgrade. Now let's look at some key data and metrics on PayPal in this absolutely brilliant tool called StockUnlock that has been created by a couple of great guys. Don't worry, I've got no affiliations with them. I just like to use their tool because it's the best tool that I have run across so far. PayPal is down 7.13% in after hours. If we look at the stock price, PayPal has gone from $308 down to $72, which is down by almost 77%. So the price has been absolutely demolished. If we look at the key metrics, the market cap of PayPal is 81 billion, the trailing 12 months PE is 30 and the forward PE is 13. So we can see in the forward PE that there is not much expectation built into the price for PayPal. However, a more important metric is the price to free cash flow and the free cash flow yield. So the price to free cash flow is 16, which is way down from PayPal's highs. We will get to that in a moment. And then the free cash flow yield, if you simply take 1 and divide it by the price to free cash flow, you get a free cash flow yield of 6.21. I was talking about creditworthiness and how investors use this to assess how safe it is to borrow money to the government. And if we go to the freeform tool, we can see something called the risk premium. Risk premium is a metric that Benjamin Graham talks about it in his book, The Intelligent Investor. And it's calculated by simply taking the free cash flow yield, which is, we saw it 6%, and divided by the 10-year bond yield, which is currently at 4%. So if we take 6 and divide it by 4 and do some quick math, we get to 1.5. So Benjamin Graham talks about that investors should be compensated by taking on risk. So if a company is not returning more than the 10-year bond yield, then the investors are taking a higher risk than what is considered risk-free, which is the 10-year bond yield. So everything above 1 is considered good. The higher the better. Everything below 1 is considered risky. If you would look to many companies, the S&P 500 and the Nasdaq 100, you will see that many companies have a risk premium below 1. That means that many companies today are yielding far less than the risk-free premium. So on the face value, PayPal seems cheaper. If you continue in the freeform tool and look at a couple of different metrics, revenue, stock price, price to free cash flow, and the free cash flow, we can see that the revenue and the free cash flow have been growing. However, revenue has been growing at a faster rate. Those are the two full lines. And then the dotted lines are the stock price and the price to free cash flow. We can see that they have been much higher in the past and they have come down a lot. If we look at the stats, we can see that the revenue has been increasing by 15%. Compounded annual growth rate, and the free cash flow has been going up by 9%. So the revenue is growing faster. However, we can also see PayPal's price to free cash flow has gone down from almost 34 to almost 17. So it seems cheaper. However, there is still the topic of increased operating margin, as well as PayPal is in a space where many other big players are coming in. Those are also risks that need to be accounted for. Lastly, in StockUnlock, let's look at the discount and the cash flow analysis. So if we look at the free cash flow metric and we leave everything filled out as it was pre-filled by the tool takes the latest metrics that it has. Number of years to project is 5 years. The growth rate is 8% annually. PayPal has been buying back shares at 1%. So the average price to free cash flow over the 5 years is 35. And we saw that it has come down quite a lot recently. And if we assume a 10% discount rate, this is the average rate of the stock market and an overall expectation what the stock market could deliver over a long period of time. So if we leave all the metrics as they are, we see that the fair value is $154, which is 110 above the current price. Most likely, PayPal cannot continue doing this. If we adjust the metrics down and go from 8% metric and we go to 6% free cash flow growth rate, and we say that PayPal will not be buying any stocks back, and the price ratio is going to go to 25, so increase from 17, and we are not expecting 10% return, but an 8% return. We can see that still the fair value of PayPal today is above 40% where it's currently. And that's what I mean. There is very little expectation for this stock. Lastly, let's calculate the price to free cash flow after the drop in stock price today. So if we take the market cap of 81.67, which was before market close today, and we reduce it by the drop in stock price, we see that the market cap is going to go down by around 6 billion. So 81.67 minus 5.97 is 75.4 billion market cap. And we saw that PayPal is producing around 5 billion of free cash flow annually. So we divide by 5. We see that the price to free cash flow is going to drop to 15, which illustrates my point even further. So I would like to conclude by saying that PayPal is not a high conviction position for me, but rather a low hanging fruit. What I mean by that is that there's a little expectation baked into the price of PayPal at the moment. Peter Lynch, my favorite investor, talks about 6 different types of companies, and my interpretation from those lessons is that PayPal is a so-called turnaround. The turnarounds are characterized as potential fatalities that have been badly hammered by the market for one or the other reason, but they can make up for lost ground under the correct circumstances. Of course, there are also opinions that PayPal is a value trap, so not really a buy at all, but that is why investing is so interesting. Nobody can predict the future, and only time will tell who was right. So there you have it. That was my PayPal stock analysis. If you have questions or comments, please leave them down below. And if you're not already subscribed to my channel, please hit the subscribe button and share this video with your friends and family. I will do my best to create regular videos with updates of my portfolio, and I will do more fundamental analysis and review companies, their earnings, other investor buys and sells, and everything around investing. Thank you so much for watching, and I will see you in my next video.